ConocoPhillips Q2 earnings take a hit, but here's the twist that's ruffling feathers. If you're keeping tabs on the energy sector, you've likely heard the news. ConocoPhillips reported a decline in second quarter earnings, primarily due to plunging oil prices. But here's where it gets controversial. While falling prices dented profits, the company's production volumes actually rose, creating a tug-of-war between market forces and operational gains. Let's break this down. The Houston-based oil giant announced that its Q2 results were impacted by weaker crude prices, which dragged down revenue. However, increased output from its operations partially cushioned the blow. This dynamic raises a key question. Should investors focus more on price volatility or production scalability when evaluating energy stocks? Some analysts argue that production growth alone can't offset the risks of a volatile commodity market, while others see it as a sign of resilience. What's your take? And this is the part most people miss. ConocoPhillips is selling its Anadarko Basin assets for $1.3 billion. This move not only accelerates its plan to divest $2 billion in non-core properties, but also signals a strategic pivot. By shedding assets in less profitable regions, the company aims to reinvest in high-potential projects and strengthen its balance sheet. Critics might call this a sign of desperation in a shrinking market. But supporters could view it as smart capital allocation. After all, isn't trimming the fat a hallmark of long-term success in any industry? Here's a real-world analogy to simplify this. Imagine you own a lemonade stand that suddenly faces a drought, lower prices. You can't control the weather, but you can squeeze more lemons, increase production to maintain profits. Now, if the drought persists, you might sell your old lemon juicer, non-core assets, to buy a better one for the next season. That's essentially what ConocoPhillips is doing, adapting to a drier market by streamlining operations. But let's get one thing straight. This isn't just about numbers. The broader implications are hotly debated. Should energy companies prioritize short-term cash flow over long-term exploration? Is selling assets a sign of confidence in future projects or a retreat from a struggling sector? We want to hear from you. Drop your thoughts in the comments. Do you think ConocoPhillips' strategy is a smart gamble, or does it signal deeper troubles in the oil industry? Let's spark a conversation.